Microsoft is buying Activision Blizzard for nearly $69 billion or $95 per share. We'll talk about what this means for both companies on today's video. What is going on, investors? Hopefully you guys are doing well out there. Big acquisition news, and big is an understatement. This would be by far the biggest acquisition that we've seen in a while, and especially from Microsoft, which its previous largest acquisition was for LinkedIn. This is nearly $69 billion or $95 per share. We'll talk about what this means for if you hold shares of Activision Blizzard. We'll talk about what this means for you in a moment. We'll also get into the balance sheet over at Microsoft. How does this impact this company's cash position, which we know was extensive, but when you potentially minus off nearly $70 billion, we'll talk about this. Also, what does this mean for Microsoft's revenue? We've got a company coming on board that's doing about $10 billion worth of revenue. We'll talk about what that means for Microsoft, and then we'll also look at this from a technical perspective. If you follow this channel to any certain degree, you know that every Friday we recap all the major FANG stocks, including Microsoft, and this is pulling back into one of the best buying zones I can see for Microsoft over the last several months. We'll talk about this from a technical perspective if you can come in here and buy the dip. Now, let's talk about the deal. It's for $95 per share, or about $69 billion. This appears to be, at least at the current time, an all-cash deal. Occasionally, when these acquisitions happen, sometimes if you own shares of ATVI or Activision Blizzard, sometimes maybe you get a little bit of cash and then you get some shares of Microsoft. That doesn't appear to be the case, at least at the current time. You're going to get cashed out in your brokerage account $95 for every share of Activision Blizzard stock that you own. And so what does that mean right now? Right now we're seeing the stock is trading closer to about $82 per share. That is about $13 lower than where the cash out price is. So I'm not going to get on here and tell you if you should buy or sell. That is really a decision that you need to make. You need to factor in how much are you in for this stock for? Will you be taking a loss? Will you be taking a profit? That will impact your capital gains taxes as well. You want to think about that. The other thing that we have to think about is this is a large delta. So this stock actually surged much higher today. This stock was actually closer to about $86, $87, even a little bit higher than that. And so it was a little bit closer to that $95 range. What I could see happening is right now the stock is still trading a little bit lower, but as you get closer to the consummation of this deal, which appears to be in fiscal 2023 for Microsoft, which is still a little ways away, that the shares of Activision will continue to inch up as this deal gets closer. Now you do have some risk, okay? The risk is the deal falls apart, but we do see that there is a breakup fee of about $3 billion on this deal. And for a company like Activision Blizzard, for 9 months, they did $6.6 billion. That doesn't include the all-important fourth quarter where you see a lot of video game sales. This company will do roughly $10 billion this year in revenue. I'm talking about Activision Blizzard. Well, I tell you what, $3 billion in straight cash would be absolutely phenomenal for this company. So even if the deal falls through, you would expect Activision shares to likely decline, but the company would be bolstered up by the fact that they would have $3 billion just put in its lap. The other things that could potentially happen is you could have another bidder come in. So another bidder in the space, another video game maker, another private equity group. But when we're talking about $69 billion, I think that is likely not going to happen. There's no other video game maker with that type of money. In fact, there's not many other companies in the world with $69 billion that they can not only have cash on the balance sheet, but also access in the debt markets as well. The only company that really comes to mind is likely Apple and maybe Google, but even Google doesn't have quite that amount of money to be able to spend on something like this. This also folds very nicely into Microsoft's business. Obviously, they are the maker of Xbox. This is a match made in heaven, and if this deal can go through, I think it will be absolutely phenomenal for Microsoft. And look, if you bought the shares of Activision Blizzard at a higher price, this stock was actually trading at a higher price. The 52-week high on this one is actually over $100. shares. So it's possible that even if this stock trades closer to $95 per share and Microsoft eventually cashes you out on that you will still take a loss on that one. So you got to think, if you own shares of Activision Blizzard, you've got to think about your opportunity cost as well. So you could sell the shares now and take that money and go invest it into something else, or you can hold on to this stock for potentially another $12, $13, $14 worth of gains once Microsoft can get the deal done. Now, in terms of the deal, Microsoft did come to the table with Activision about late last year. Now, Activision has been in the news based on some sexual harassment things within the company. There has been employee and executive turmoil. We also are seeing that in Microsoft as well. So this could be a match made in heaven in that sense, although I'm kind of joking and it might not be something that we should joke about. Hopefully both these companies can kind of clean up the culture there, but it can potentially help Activision, where you had a lot of likely disgruntled employees maybe getting folded over into Microsoft. Could be a good deal. Now, we did talk about there's this $3 billion breakup fee that would definitely hang over Activision's head, and it would create maybe a little bit, okay, you have a little bit of margin of safety if for some reason this deal falls apart, and it can fall apart for a number of different reasons. But number one could be a regulatory perspective, just the regulatory environment out there in terms of acquisitions of this size and letting rich companies get even richer like a Microsoft. That may fall through the cracks, but considering this breakup deal is so big, this is a $3 billion of straight cash, well, that says to me that Microsoft has a lot of confidence that they've already, since they were working on this deal last year, they've probably already ran this by, at least on a surface level, through some regulators, and they believe that this deal would get done. Also, the video game space is highly competitive, okay? You have Take-Two Interactive, you have Tencent, you have Sony, you have a lot of video game makers out there. There's a lot of little smaller startups as well. Now, what will be interesting is the fact that you have Activision CEO who's come under fire. He's expected to leave the company. You would expect also a lot of Activision's management to get flushed out because Microsoft already has those teams likely in place. Now, let's talk about this from a financial perspective. Microsoft has over $130 billion worth of cash. Now, what I will say is I don't think this cash reflects that Microsoft also bought Nuance Communications. I think the deal was between about $16 and $20 billion. So I think you need to minus off that from here because that deal has not officially closed or been approved by all the regulators out there. So you've got that likely coming off this cash balance sheet, and then you've got another $70 billion or so likely to come off. Even counting that, Microsoft will still have plenty of cash. Now, we also don't know that it's possible that Microsoft finances this through some kind of debt, through some kind of bond offering as well. This company does have a fair amount of long-term debt, about $50 billion, but this company could finance this deal with a very, very low interest rate loan, and that is possible as well. So we're not exactly sure if Microsoft will just unload the balance sheet in terms of their cash. They could take on some more debt. Either way, it wouldn't necessarily be concerning. I will say from a broader economic and macro environment, when you have inflation where it's at, the fact that last year we saw inflation at 7%, and some people would argue that it's even higher than that, that means the value and the purchasing power of this cash over at Microsoft is declining every single day of the week. And the fact that they're deploying it, I absolutely love this from a cash usage perspective over at Microsoft. And look, there's a limited amount of deals that regulators will allow Microsoft to do. And so if they're able to land a big, gigantic company like this that folds up nicely into their video game market, I absolutely love that. Now, let's talk about it from a revenue perspective. Microsoft is doing in 2021, they did about $45 billion worth of revenue. We talked about how Activision Blizzard did $6.6 billion. This is through 9 months. I saw earnings estimates for the upcoming quarter. of about 2.85 billion. My guess is those are slightly conservative. You could probably say they're closer to about $3 billion worth of revenue. That means this company is going to do about $9.5 to $9.6 billion. Factor in a little growth next year, and this company's right at that $10 billion in revenue. And so this is actually pretty nice for Microsoft. Although again, when you're doing about already $45 to $50 billion worth of revenue, an extra 10 is not necessarily going to move the needle. But the fact that you bolted on $10 billion worth of revenue for about $70 billion is really not that wild of a premium for Microsoft. Now, in terms of a technical perspective, I tell you what, we talked about how there's currently a delta in the Activision Blizzard stock price where you've got a $95 buyout and you've got about an $82 stock price. I'll let you to decide how you want to play that. Now, with Microsoft, it is at an absolutely critical level. We talked about on our Fang Stock recap show, we are in a major uptrend on this one. And we also have an area of support, which were the previous highs on Microsoft at about $300 per share, which is where the shares are trading now. You would expect Microsoft to find a level of support here, right where I'm waving this green line. You would expect a level of support to come in there, and you've got a secondary level of support with this upward trend line. If these areas are taken out, it does have me mildly concerned, not overly concerned, because you would really, for this uptrend to really technically be broken, you need to take out the previous lows, which are now down here at about $280 per share. So there's a little bit of wiggle room in between 300 and down to about 280, where the stock could potentially go back down there, but then go back up. That would be what we would want from a bullish perspective. The other thing that we could potentially do with Microsoft is they've pulled forward a ton of price action just over the last several years, really the last 2 years, like a lot of tech stocks have since the March lows when the pandemic really started to set in. Well, it could be that you just start going sideways on this one. You have an upper end of the range at about 340, and maybe the lower end of the range is some down here in the 280s to 290s range. This is technically an area where you can step in here and buy Microsoft. I love what they're doing from a cash perspective. This cash does absolutely nothing sitting here except depreciate in value in an inflationary environment. We also are not 100% sure how they're going to finance that. We'll eventually get probably some clarity on that. Although given where interest rates are moving, they're moving higher and cash is losing its value. I'd actually expect Microsoft to use the vast majority of this cash position. Not only that, this company prints cash from a cash flow perspective. This is a very, very solid deal, I think, for both shareholders. Although if you bought Activision Blizzard at a higher price, you're probably slightly disappointed. All things being considered, this is an area where I like Microsoft from a technical perspective, and from a fundamental use of this cash, I also like that as well. Tooting my own horn a little bit, I do own shares of Microsoft. Hopefully you guys enjoyed this video. I'll be back again soon with lots more this week. Good luck with your investments.